So David, you know a lot about fintech. You have a consultancy that focuses on fintech and a lot broader than a consultancy. Tell me more about what you guys do.
Yeah, we're busy for starters in terms of everything that's going on. I think we founded 11FS on the premise really of a bit of a frustration, if I'm honest with you. Whether it be the frustration when we were sort of client side in large banking organisations, or for some of the guys who've been working consultancy side or agency side as well. And really that frustration is kind of down to really the lack of progress within the industry. We've seen billions of pounds being spent by banking organisations, and really the progress that we would expect to see in those in the industry just hasn't happened yet. So for us, what we're trying to achieve with 11FS is we have this mantra. It's the 1% finished. We believe digital banking is only 1% finished. And really what we mean by that is not just for the banking organisation, so not just what the banks have delivered themselves, but kind of fundamentally everything through that value chain. So when we sort of look at the suppliers, we kind of hold the suppliers in the mix probably as culpable as the banks for the situation we're in today. I think the banks have probably defined the definition of madness by continually doing the same thing and with the same suppliers and expecting a different outcome. And for us, whether it's people like Jason Bates, who started Starling and Monzo, Chris Skinner, who is kind of a industry-renowned author, people like Simon Taylor, who ran all of the blockchain division for Barclays, or myself, who have done a bit of this and a bit of that. Then we've got proper people who have actually been there and done it. So for us, we're here to kind of help people be truly digital rather than just try and digitize analog capability.
And it's been a big year for you guys, would you say?
Yeah, for sure. I think it's been a big year for the industry generally, really, which is fantastic, right?
Tell me more about what you think the biggest things that have happened in fintech this year. What have been the standout kind of markers that have made fintech a thing in London?
I think fintech's been a thing in London for a few years now. We've been slowly simmering away, and I think this year is probably the first time that the globe has woken up to London really being at the kind of the tip of the spear when it comes to fintech. Really, we've seen the kind of growth of the fintech people who are looking to take banks' customers. And I think this year, actually, we're probably seeing the significant growth of the fintechs who are there to be the customers of the banks. And I think the difference in that and the change in that mentality, I think has been pretty significant this year. I think one of the major things that's happening is it kind of feels like we're all pretty much pre-fight still. I think there are lots of kind of numbers that have been put out there about the lack of switching of customers to other organisations, and the billions of pounds that have been spent in terms of setting up things like the 7-day switching process. But fundamentally, I think this is all pre-fight. We're still in the build-up. People have done the way in. We've got kind of all of the challenges that are kind of sort of sharpening their tools really for a massive push in Q1, Q2 next year. Mm-hmm. So I think the major thing this year is having seen what the likes of Monzo and Starling and Atom and Bud and kind of all of these companies that are planning on coming to market next year, I think we're just being left a kind of a very uncomfortable cliffhanger of actually where things are going to go for next year. So I think one major thing though that we've definitely seen is fintech isn't just affecting fintech companies anymore. Mm-hmm. The changes that we're seeing in very large suppliers, the changes that we're starting to see in some of the very large banking organisations as well, kind of means that fintech is more of it's not a collection of companies anymore. It's just fundamentally a different way of thinking, and I think that permeation of different ways of thinking into banking kind of has to be a good thing for probably ultimately the customer, because actually the services, the capability, the offers that actually start getting to the mass market next year, fundamentally different to what we've seen in the past.
So this is the calm before the storm.
Yeah, I think it's the graceful swan sort of moving across the lake when actually all hell is breaking loose under the water. Having sort of spent quite a few times with a lot of the startups in this space, it's definitely not calm behind the scenes. These guys are well and truly sort of setting themselves up for a very big next year.
So banks this year How do you think they have fared they seem more open to experimenting, they seem more open to innovation, and they realise that you know, these disruptors are coming. How will they fare next year with
I think this is
suddenly happening?
Yeah, I think this is the challenge, right? I think, you know, the fintech people coming into the space, you know, the challenger banks coming into the space, you know, we've got really deep regulatory changes happening with things like PSD2 and obviously the CMA coming out and backing all of the changes that are going to be happening in the space. So I kind of feel I'm hearing the right noises from the banks, but ultimately most of these things only happen when you see it in practice. Mm-hmm. So, you know, we've seen innovative things in banks for maybe the last 10 years, but most of them have been limited to labs and, you know, dirty little secret corners of organisations where nobody can spoil them. And what we need to see is actually those innovations hitting customers. You know, this is the major difference. If you go talk to, you know, a Xero or a Monzo or a Bud, you know, these guys can get something from an idea to a customer actually using it within weeks. You know, it still takes banks 9 months to do anything of significance, which is, you know, is actually where the problem comes from. Mm-hmm. You know, when it takes you a lot longer, it costs you a lot more money. Ultimately, these things are going to start to show pretty quickly when, you know, we're in a situation where the customer has a significant choice to make over a company that can really differentiate on service and one that talks about a lot of.
Do you think banks will ever get to the point where they can move quickly, that they do have innovation throughout their business rather than just as a sideline, you know, with some maybe just paying lip service to the idea?
Yeah, definitely. I think it's possible. You know, I think anything is possible, right? I think when you've got the significant customer bases, the significant amount of money to actually invest in this space, like all of the incumbent organisations have, you know, they, you know, fundamentally have a different tier of investment than most of the challenger banks that are coming through. With that investment, you could do amazing things. You know, you look at the amount of money that's been spent on something like Monzo pales in significance to probably a single project in a very, very large banking organisation. So with all that money and with all the resources, as in the people, the processes, the practices, they absolutely could dominate this space. I think it's about whether they can make the cultural shift within their organisations to actually unlock that potential. You know, I've never been into a banking organisation where I haven't found you know, smart people who want to make the changes, who are really sort of focused on actually what the customer wants and how they want to consume it, mm-hmm. But really being able to unblock some of the processes, problems that are there. You know, there was one organisation we've talked to recently who has 27 different governance bodies to go through to get a change to a customer. You know, that is wow. fundamentally different to what it needs to be in terms of actually being, you know, truly agile. So personally, I kind of think if the banks wake up soon enough, they can make those changes. But actually, unfortunately, I think a lot of the changes are not just about process. You know, I don't think there's a agile methodology book that a bank can buy to get everybody to read it to say, you know, 80% of our projects are going to be agile next year. It deep-seated down into actually where their business models are being created. So I think at the point where we start seeing banks come out making significant organisational design, operating model changes, and actually start looking at how they make money, then I think really we sort of start to see a significant change in the banks.
I found it really interesting that Anthony Jenkins, the former Barclays boss, has launched his own consultancy, saying, you know, this is going to be the most disruptive thing, you know, that's ever happened for banks. And I found it interesting that he, as the boss of Barclays, didn't say those things or implement those kind of things. There's a trend that we're starting to see of people from established banks leaving them to go and do their own startups, and some of them quite high level. Do you think is that a good thing? Is that a bad thing? So
I think to be fair, so Anthony's always been quite provocative on the market, and I think there's a difference between what you can say when you're the CEO of a big bank and what you can say when you're essentially only accountable to yourself. You know, I think I've experienced that firsthand. You know, I became reasonably schizophrenic for about 6 years, talking on the behalf of companies rather than sharing my own opinion. So I think now actually you're probably really seeing what what he really believes in terms of what the market will be. And actually with their proposition, it's very much aligned to the problems that you see in the major banks, core banking systems, kind of architectural reform in terms of what needs to take place. If they can deliver something there, it's a huge market to tap into. It's most banking organizations are still sitting on, mainframe COBOL 1960s stuff. And actually, if somebody can come along with a silver bullet and fix that, then people will be snapping their arms off to make it happen. I think in the the space of kind of where they're going and actually, are we going to see more bankers moving to fintech companies? I think that trend is kind of just mounting really. Anthony's one. We've seen Oliver Busman leave UBS. Obviously, Simon left and joined 11FS. We've got increasingly people leaving big banking organizations just because they're frustrated they can't deliver. And ultimately, people want to do things. I think if at a point where you're just left in an organization with the people who are happy not delivering anything, then culturally that's going to be a problem as well. So yeah, I see that being a trend continuing, but you might start finding that actually we start seeing some pretty big appointments going back into the banks. There's been some pretty significant appointments from ex-Google, ex-Facebook people going into banking organizations, and I suspect Q1 we'll start seeing a few of those as well.
So you mentioned there about Anthony Jenkins knowing the inside a bank, inside out.
Yep.
Do you think there is going to potentially be, or is there now maybe that we're not seeing as much? We kind of put it all together going, this is fintech, but a split between what it will be for serving banks and the infrastructure for banks and helping them do better versus the consumer one, and what are the differences between those and what are the potential for each?
So I think there's an interesting thing there, and actually oddly, when you start looking at people who've left banks to then serve banks, actually I think they've got a much better way about going about it than actually people who have never experienced the frustration of kind of being in a bank and knowing just how hard it is on a day-to-day basis to make things happen. Sounds like a sob story, I'm not trying to make it, but it's really, really difficult. Any massive organization, it's very, very difficult to make change happen. And you have to be, one person can't make that change happen. It's a, the sort of acidity in a swimming pool, do you know what I mean? It takes a lot of acid to make the pH change. Similarly, it takes a lot of good people to make the culture change within a company. So I kind of feel like the shift towards, like I say, companies who want to take banks' customers to companies who want to be the customer of banks. Definitely, I think that challenge is probably a lot greater in the next 6 months, really. And I think that the challenge there is actually it puts so much more pressure on the incumbent suppliers in that mix than it actually does the banks. Okay. So the banks have still got millions of customers. They've got all the money to invest in the world. They can mobilize 50, 100,000 people if they needed to make something happen. But fundamentally, it's the suppliers in that mix who have been, I think, really sort of complicit to the problem that we've had. So actually, some of the suppliers are probably bigger than the banks themselves, right? And being in a situation where they need to change their culture, actually, a lot of these guys are maybe 2 steps ahead of where the banks are in terms of the cultural changes, the technological implementations that are needed. And actually, you start to see this. Some of the big boys are having to separate out kind of disruptive technology in their own organizations because actually it's actually cannibalizing all of the revenues from other parts of the organization. So I kind of see those big guys in this space who have been traditionally serving the banks in terms of the changes. That's where we're going to see the most amount of change happening in the next 3 to 6 months. How they really sort of wake up to the changes, how they really change how they deliver things to their customers, and fundamentally the rates that these guys are charging. There is an FS rate that I don't think people know enough about.
What do you mean by that?
The capability that it would take to deliver something in the retail space and the amount of money it would take to deliver it in the banking space is factors of hundreds of percent. And actually for me that's it's down to kind of a lack of understanding sometimes in the organizations themselves to know what good looks like. But fundamentally it's been allowed to be got away with. And for us, we kind of see it as whether it's a large organisation or a small organisation, there just should be a process of doing it. And I think this is probably one of the major problems that's coming to some of these suppliers in the mix is they're trying to adopt sort of swift, agile, incremental benefit options in terms of doing it, which a major benefit of it is it's a fraction of the cost of delivery of the old waterfall methods of doing it. Whether or not they're going to be passing those savings on to their customers or not, I very, very much doubt it. So,
what kind of impact do you think it's had so far, and what might it have in the future? I know a lot of people are very much saying, putting a positive spin, saying this is, the kind of disruption that fosters, new companies, new ideas. Is that just wishful thinking?
That sounds like making the best of a very bad situation, doesn't it, to me? But I kind of think, leaving the European Union, in my opinion, is a bad thing. But I've accepted that we're doing it. Now I think we're in the situation where we're not doing it and we're not doing it. And actually that's the worst piece, right? The uncertainty that's happening and the fact we don't know how we're going to be impacted by this, we don't know if things like passporting of licenses is really going to be a kind of an option for people going forward. We don't know how we're going to have entrance to the common marketplace in terms of actually what we're doing. We don't know how this is going to affect resources that are based here but actually potentially won't be able to. And all of those things, all of the uncertainty around the market is really what the killer is. I think if, this is the slowest removal of a Band-Aid that you've ever experienced in your entire life, right? And that's definitely not how the saying goes in this space. So I think, the quicker we can get to a point where we know what we're doing, I think people can accept it, they can adapt to it, and they can move on. I think we're currently just paralysed by uncertainty. And unfortunately, it's started to, show the cracks, really. We have started to see, pretty senior people in the space, in banking and fintech, very seriously considering leaving London. Some of them have already. And that's not companies, that's individuals. But unfortunately, one of the major things that's made London, incredibly successful in this space is the openness to people coming here and, bringing new ideas, bringing new processes and helping the companies who need those problems, I kind of think, the fintech piece, it isn't finished. And I think almost until the bank's problems are 100% sorted and, to our point earlier on, I think we're only 1% through that in terms of the process, then, I don't think this is a problem that will go away. Unfortunately, are we going to start seeing the smartest, the brightest, the best, both the individuals and the companies that sort of were founded here moving away? It's going to be a terrible thing if it happens. And I think, definitely the government is doing a lot to try and put in place, processes and establish boards and, different things to do it. But for me, it's kind of papering over the cracks, really. The best thing that they can do is very, very quickly come to a point where we actually know what we're doing. And at that point, we can actually decide whether it's an acceptable thing that we can deal with or whether we're all going to go and move to Berlin.
As for next year, what do you guys have planned as a business yourselves, and what do you see happening more widely?
So next year, there's I can't talk specifically about clients, but we're in the midst of building out a couple of banks for people.
Just a couple of banks.
Just a couple of banks. And it's fun. It keeps us really busy, but it's kind of where our expertise is. So I kind of see more of that building in terms of what we're doing. The FinTech Insider is going sort of crazily well in terms of the podcast that we launched. So, definitely I see that ramping up. There's a few people coming into the mix now that are going to be working with us very closely on that, which I can talk about more in January. But I definitely see that sort of stepping up in terms of the way in which that's distributed and really how good we are at doing it, because we've basically just been making it up as we go along to date. So luckily we've found a process and a routine that works, but I think definitely getting some more structure and rigor around it will help us. I think in terms of the space, I think it's the best time to be doing this stuff. Fundamentally, I wouldn't swap any era or decade working in banking for really the precipice we're on of change. I think Q1, Q2 next year, all these banks coming to the market, it's going to be so fun to see what happens next.
What is the one thing that you would want to happen next year?
So I kind of think, the main thing that I hope happen is that, and I think this is going to be the differentiation point, if I'm honest with you, for the challenger banks. We saw a very similar disruption in insurance, right? When the aggregators came into this space, they were, a good service, a better product, a massive opportunity to help customers shop in a different way, to gain access to car insurance, home insurance, etc. Obviously now they just give people meerkats and various different things, but they still, they're a major disruptor in the value chain of insurance. I kind of hope banks that are coming into this space learn from what those guys did, which is above the line marketing spend. Most of the compare the markets, the money supermarkets of the world, until they started spending significantly above the line and really made the general public aware of them. There's a bunch of people that within the scene, know who Atom is or know who Monzo is, but actually my mum has no idea. It's a lovely coral-covered card that's in my wallet, and that's about as much as she knows. So actually, how do these banks establish themselves in the psyche of the general public? And that's just by being seen to be a financial services company. So spending above the line, get into the psyche of the general public, and then I think we'll see switching. I think we'll see significant changes in the kind of the structuring of who's got what customers and how they're set up. So yeah, learn from the aggregators, spend big on marketing.
Challenger banks need their own meerkat.
And well, it's got to be something, right? People will do crazy things for a meerkat, so I think they kind of have to learn from that. A kind of a little hook to kind of get people rolling, and actually, as soon as you start using one of these different banks, actually you feel the experience, but it's that nudge to kind of get you moving to actually get on the process of doing it.
So the benefits to customers will be pretty obvious of using these kind of services, you think?
I think they will be if they're explained in the right way, right? I think that's the opportunity. I think you can't, having used a number of them, I don't think you can argue that the functionality, features and approach is definitely better. But actually the experience that I get from the ones that I use on a daily basis, so Xero we use on a daily basis, Monzo I use on a daily basis, the experience I get from those guys as opposed to the experience of some of the incumbents in that is like night and day. This isn't purely a features game. It's how the brand actually manifests itself through doing it. There's been a huge amount of talk about will people trust these new banks, but actually banking generally is starting from a pretty negative point in terms of trust. And actually I think if they can establish a brand and a connection with customers, and actually a kind of an element of fairness around actually the punitive charges that are sort of placed around things like overdrafts and etc. around current accounts, then actually I personally I think they've got the opportunity to step up a lot quicker than actually the banks can kind of recover. Fundamentally these guys they're here to deliver a service. They're not here to deliver products. And I think that change in mentality was really, really significant. How quickly can banks sort of catch that up is probably the challenge, I guess.
Who next year, in terms of startups, are you looking out for? Who you think are going to become, you're interested to see what they're doing that we may not have heard of before?
Sure. Well, I guess there's all of the obviouses in the challenger bank space. The Monzos, Tandems, Starlings, Atoms. These guys are really going after all of the bank's customers in terms of the space. In Berlin, Solaris Bank, I've been really impressed with in terms of all of the things that they've been doing. They're acquiring customers really, really quickly. Similarly, over in Berlin, N26, I've been really impressed with the approaches that they're taking, and I kind of see a lot of bright future for those guys. Bud, I think, is a very different approach in terms of what they're looking at doing. When we're talking about the inertia of switching, those guys mean you don't actually have to switch anything. It's about consolidation and taking advantage of pretty significant regulatory changes that are out there in the market. But the list goes on and on, right? Every slice of banking that there is somebody doing something pretty exceptional in that space. Definitely in the retail space, I think those guys are the ones that I look out for. I think commercial increasingly. So SME next year is going to be a real big trend that there's going to be the emergence of quite a few banks coming to the market in that space. Massively underserved, really, really, really difficult for entrepreneurs. A lot of the people in a lot of the accelerators coming out of them find it really difficult to actually start getting a bank account. And actually people like Civilized, people like Tide coming to the market, I kind of think will really start to plug a bit of a gap there. And actually for banking generally, SME banks are so much harder to get right than the retail banks. Retail banks really are about the kind of everyday banking experience. For a large incumbent commercial organisation now, a Lloyds or a Barclays, they should be looking at Quicken or Xero for kind of inspiration of actually what their SME banking experience should be. Because as a kind of somebody who runs a business, I barely go anywhere near our business banking account. And that's because the features and the functionality aren't there. If I want to make a payment, I make it there. If I want to do literally 99% of what I would consider banking these days in terms of doing it, it's with Xero. So it kind of feels like those guys need to almost wake up to the fact that their customers are just integrating them into Xero, and actually how do they start owning some of that, the share of experiences, share of services with customers.
Maybe they don't want to.
Well, but this is a business that's based on engagement and cross-sell, right? The banking model of cross-sell only works if you actually see your customers. The point where somebody like in retail, Bud can actually start aggregating people and giving a full appraisal of the marketplace data that you guys actually have to give better advice. You guys never see those customers anymore. For me, my business bank hardly ever sees me, and actually those would be opportunities to reinforce the brand, reinforce the service that I'm getting, and actually sell me more products. So
they are missing a trick.
Exactly. If you don't see your customers, it's very hard to establish a relationship, right?
David, thank you so much for joining us.
No problem at all.